Welcome back, YouTube. I wanted to address some of the things that have been happening over the last few days. I took a few days just to explore down the rabbit hole, and we're going to cover that in a series of videos. I have put together a lot of information here, and I'm getting somewhat of an idea of what's going on here. So I'm going to put all the information in these videos, and you can draw your own conclusions. I have not found a way to organize this, but because there's so much. But I'm going to paint a picture and give you the information. I think you will get where this is heading. So first off, I want to take a look here at price action. We've seen that the short spiked ultimately in Doge. We saw that the other day when we had the sell-off, and they looked like they were interested in taking a higher position, but then they changed their mind and had a decent sell-off and the next day, and then they've been going sideways with minimal movement since then. This is for Doge, and we'll take a look here at Bitcoin price action. Let's go look at shorts really quickly, and we'll see that shorts are pretty much non-existent, right? Not necessarily non-existent, but they have not increased. They're below the 14-day average, and they're down 4.25% on the day. So not that big spike that we've seen in Doge, but it's pretty much hanging around the 14-day average because they had a boost back in May 23rd. So go here. We're going to look at Bitcoin price action here. You'll see minimal movement, right? Just resting kind of on the 14, a series of retests, has not been able to break higher for Bitcoin. That 71 to 73 mark has been a steel wall thus far. So crypto has not been able to break out. It's been retesting. We've seen some big sell-offs here because we were technically above it, and we came crashing down to the 14, which seemed kind of to catch it. We can see the same thing across the market. It's at very similar shock waves. We're going to take a look at another indicator here briefly, but you'll see. Let's get Fib on here as well. That is not what I wanted. Let's go to Binance. There we go. Okay, so we were close. We had, let's zoom in a little bit here, because you guys have been following the channel. You know that I was talking about the 14 and the 72, the golden cross. We had this merger here. You can see the 14 going into the 72. The 14 is this yellow line. The orange is this 72 going into and never emerging out of it, right? Literally crossing into the 72 and not merging out of it. You can see, I'm gonna highlight it here so that way you can see it. See it? There you go. So you can see it going in, literally hitting the top of it, like literally forming like a peak in the 72 and then getting pushed out. And then we had this sell-off here across the markets. So let's take a look at one more thing, and then we're going to get into what I believe is happening. I'm going to scoot over to Coin Market Cap. And most of these sites are free. Some of the stuff I use on TradingView isn't, but CoinMarketCap, this is some of the things that you can look up on your own and verify. So I know some people were looking at, oh, it's the golden cross. What happened to Doge? I'm questioning Doge. It's not selling off. It's selling off the market. It's not going to go anywhere. If you're new, the first thing I always tell you is check the market, right? Don't just isolate on the coin that you have because of the expectations that you have for your investment. Before you single out, before you single out Doge, make sure that Doge is being singled out, and it's not. What you that drop you seen the other day. Look at here on the right side of the screen on the last 7 days, right? It happened across the board. This was a unanimous decision. Look at this. Like at the same time, we talked about over $250 million left the market in the first hour, and it was a predetermined amount of capital to raise, right? We all know that when we talk about institutional money and in the stock market going, the crypto market going to all-time highs, Bitcoin going over 100,000, Dogecoin going over $1, Ethereum going over $10,000. All of these projections, the institutional money plays a big part in that. Retail does not have the money to pump Bitcoin to 6 figures, right? Retail could pump Dogecoin to over $1. But because of the spread and all the new coins, shiny object syndrome and stuff, it's more than Doge is going to have to ride that institutional wave as well, which it has been. And this is proof here that institutions, like, don't let everybody tell you, oh, Doge is a poop coin. Institutions don't hold Doge. Explain that. Explain that this unanimous decision here. You can tell which coins they hold and which coins they don't. But when you have these massive sell-offs to raise capital and the entire market tanks, like the retail, all the Dogecoin holders, the XRP, the Solanas, the Ethereum holders, Bitcoin holders, they're not in some secret garage or warehouse and saying, hey, at 3 o'clock on Wednesday, we're going to dump. Like, I promise you that's not happening. This is an algorithm. This is institutions saying, hey, we need money. Let's, we're going to sell by X%. I'm sure they have a formula here. We hold this much XRP, this much Doge, this much Bitcoin, and we need to raise capital. We're going to adjust our portfolio. And then you get things like this here. You get things like you see on the right-hand side of the screen here, which is this unanimous decision here to sell off. Doge is not being singled out. Let's just go ahead and get that out of the way. Now, the question is, why have we seen this large sell-off here, and is the timing a coincidence? This is from what I understand, this is the largest sell-off we've seen since we got confirmation of the bull run, right? And this is something I was talking about in the community section and on X. I was saying this is either a very interesting discussion or it's a strange coincidence, right? That this is all leaking around the time that we're having this threat of a major squeeze in GameStop. And then I have to go back and say, who were the major players in GameStop in 2021? What's happening now that's different? Why is this a potential threat? And what would they possibly need that money for? Because the stock market is their largest holding, right? They as an institutions, hedge funds, they will raise capital out of the crypto market 1,000 times before they give up those positions in the stock market, especially if they're vulnerable, aka shorts or naked shorts. And after what we've seen last week with Roaring Kitty and the timing of the market just across the board absolutely dumping when he's discussing what we went on his live, and even before, Robinhood, some of these institutions, they were expecting a rush into the stock. They were saying, hey, I remember Vlad off of the CEO of Robinhood, he said, hey, we're ready. We're expecting this influx of capital coming in. We're ready. So they're positioning themselves to not have like any outages or emergency maintenance and stuff like that, like we've seen in like 2020, 2021, when they got a large volume in a short amount of time. They said, hey, they're ready. And what does the market do? The market absolutely goes to hell. And you can say that's a coincidence, or you can say that they're vulnerable in this actual position here, and that there is something there. And you can look at the evidence here of like the 5 billion. Let's see. Again, I'm compiling everything because I have 1,000 tabs that I could prove this with. Let's see. 1,000 tabs open, because what I'm looking for now is there's an article out there that GameStop shorts lost over like 5 billion like within the first week. And this is very interesting, right? Because you say you're reporting these losses here. Down 4.1 billion, which they tripled in May. And so this is in May, right? You'll see, matter of fact, I'm going to start switching things around on the screen here. Again, quick Google searches, you can see this. I've verified a lot of this, but again, I have so many tabs open right now. So this is just in May, right? We're not talking about the last week. I know there are numbers out there around like 5 billion. This is just in May. They had already lost 1.4 billion. They were up, right? 400 million in April, 1.4 billion in May, toward the end of May. And then we saw these, obviously with this run up here, they were down. I believe the highest number I've seen was like 5 billion. And you say, okay, that's a substantial amount of shorts. But then you may say, well, so what, right? Maybe, Rowan Kitty's coming back and, he mentioned this stuff. They got caught. They didn't expect retail to kind of come in. Nothing to it. Not that big a deal, right? But then you have to say, well, the stock market crashing was just a coincidence around that time. But then you have to say, what about the timing here? Because obviously you see a similar approach here when you say, okay, well, you have these amount of shorts that Rowan Kitty can have, but can they produce the shorts? And this is something very similar that Adam Aaron does with AMC, which is when the retail sector gets close to cornering these companies, they'll say, oh, this is a great opportunity for us to raise money. Retail is here, and it kind of hides under the blanket of, okay, well, we need to raise money. And how do they raise money? Let's go here, right? And this is what you would see is the Friday filing saying that, hey, they plan to sell an additional 75 million shares at the stock market, right? So they're saying, hey, we need to raise more money. Now, the question is, if you're short in a position or if you're naked shorting and you need shorts and you can't produce those shares, what do you need in order to get around that position or to prevent a short squeeze or to produce the shares so that you're not getting squeezed or return the shares that you say you have? You need those shares. So it can help when you have an influx of new shares come into the market. You can get around that. And we've seen this repeatedly with AMC. When the retail sector gets in there, it's like, oh, you own 80% of the float. And, we're saying, okay, well, how can you short a stock 90% down when 80% of the float is being held? They're like, oh, blah, 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 stock lending, there's this, return the shares, blah, blah, short, tricky math, lies. And you get this scenario where you're able to drop the entire float with less than 10, 15%. Because if you add up ETFs and stuff, we're talking about 10% of the float. Apparently, you're able to affect the entire stock and drop it. So we're seeing this here with the issuing of new additional shares, right? The desire to, at least. And when there is the potential of a short squeeze. Now, I get it. Hey, they need to raise money. If there is a retail or interest in there, when the price is high, when else would they raise money? I know you don't have to type that in the comment section. I get it. But I was saying that the news release of this will be another coincidence, right? Around the time that they're expecting a large volume to come in, which could trigger the short squeeze, which could trigger people having to produce these shares that they say they have. At that time, they announce what? Hey, more shares are coming, right? Again, another coincidence, right? And then you may say, well, who are these people that are shorting these companies, right? Who are the major players, right? And you would look into like BlackRock, the market makers like Citadel, and then you'll say, oh, well, what's another coincidence, right? It just so happens that BlackRock and Citadel want to break off from the New York Stock Exchange and create their own, right? Citadel is a market maker. Citadel produces a large volume of all the shares that kind of go into the market, and they play a big role in crypto as well. These are people that are advocating for the ETF. You can rest assured that they're not going to let the crypto market play a role without them being in there. And you can think of Citadel as kind of like a warehouse, right? They're looking to streamline, make it more efficient for you to purchase shares and purchase assets at the best available price at the quickest speed, basically. So they'll have like a warehouse of actual stocks, or even I believe that we'll get to this point. It's in crypto as well, which is why when Biden vetoed that the ability for institutions to hold crypto, this is what I was saying, that this is going to turn into a political game here, because in order for them to maintain the control that they have, similar to what they do in the stock market, versus just simply selling when they don't like something in the crypto market, they need to be able to hold those those assets that the crypto, they need to be able to hold Bitcoin, Ethereum, rather Doge, all these assets that they clearly already have positions in. They're going to need to be able to hold them, right? So excuse me. the biggest thing that we're going to have to see here is what is this going to mean for these assets, right? And I want to explain what Citadel does. So Citadel, again, it's like a warehouse. So when you buy a stock from the stock exchange, you can technically buy it from a company like Citadel. You're not necessarily buying, you can process it live and they're quoting the price live, but technically it's coming from the market maker. They're more of the middleman. That's how you're able to get it so quickly, because they already own the asset, and they simply say, hey, these orders are coming in. We process the order, so you get it immediately, even though Citadel already owned it. And there's typically some type of spread in there, how that works. Yes, they can see your orders. This is how you can get into conversations like front running. Like if they see a bunch of orders coming in for GameStop, can they jump in front of it and buy before they process the actual retail's order, and then ride it up? And then when the sell orders come in, can they sell their own position first? That is, I'll save that for another video, because I do believe this is the most unethical thing in the world, to have a market maker be able to participate in the market while processing the orders for the market. That is a complete contradiction of interest, but whatever. We have these things here, and this is kind of similar to what I believe is happening in the stock market, and that we are going to see that they're trying to implement in the crypto market. So when you have this exposure here, and you say, hey, we're trying to open up this new exchange here, we're trying to build out these ETFs, we're trying to like branch into crypto, but we have this massive short position here. We cannot afford for this to go off here. We're going to need to double down here on the shorts, and we're going to need to make sure that we are at least able to hold off until we can get some additional shares here. So we need a lot of money, and a lot of money quickly. So, and that's what I believe happened when we saw that massive sell-off in crypto, right? Of 300 million, I believe, in 60 minutes, right? The entire market dumped off, and it wasn't like a complete dump. It was just, hey, we need to free up some liquidity here. And we saw the dump, right? I want to point out something here. Let me go back, because I want to go to the charts. So I think this is very important as well, because I was seeing that GameStop, and I promise you this is all tied, because the institutions, there are no separate institutions in crypto that's going to be in the stock market. So this is why when they get in trouble in the stock market, they're going to run to crypto to raise money, right? And vice versa eventually too. As crypto's market cap grows, you're going to see it back and forth. Like, these are the same institutions that are playing both sides of the field. So don't think that these are two separate teams here. They're going to use their left hand to prop up their right hand, and vice versa whenever they get in trouble. So you will see more and more of you'll see more and more of this type of action going on here when you lay things out and kind of get a broader view, right? Let me go back here, because I want to point one more thing out. And I really hope this is making sense here, because I'm tying it all together for what these companies are doing, and the vulnerability that I see that they have in the market, and how they're going to manipulate crypto here in the near future. Now, I believe that this is going to stop the crypto market from running, or is it not going to have a bull run? No, I don't believe that. I believe even more so now, if they're in a jam in the stock market, I believe they desperately need crypto to go even higher now to raise capital. Absolutely, right? They're investing to take profit just like everybody else, but I believe that they're going to go. A point is coming up to where they are going to depend on a large amount of that capital from the stock market, from the crypto market coming in, so that they can position themselves and raise the money that they need. I believe it's absolutely important here. Let me see. I'm on a different screen here. I'm just trying to find this article. Let's see. But in a nutshell, fact, let's go over to here. And you'll see, I'm going to prove it. I'm going to go switch screens. So what you're looking at here is the short volume that's going on. The effort to short GameStop is now higher than it was in 2021. Now, the interesting thing is we're not seeing the price drop. We did see some price fluctuations, and they obviously did get it to go down. As far as for halting it, we'll know that that halting ratio going up to the upside is a lot more reliable and repetitive than it is going to the downside. I feel like if it's rushing and you get a large amount of volume, it can go up to the upside $5. Oh, we need to halt, but it can fall $10 before they put a halt on it. But again, that's a separate video. But what we're looking at here is a desperate attempt here to actually short GME down, right? And we're not even talking about like a serious run here. We're talking about someone who we're talking about like a gradual increase. This isn't like it shot over $100. Obviously, this is after the split, but we're seeing an even greater effort to short GameStop here, but not having the same effect on getting it down. This upcoming week is going to be very telling to just how deep this rabbit hole actually goes. But I'm convinced that they are raising money out of the crypto market here to balance the sheets here on some of these short positions here. Basically like a 2020, 2021 2.0, right? And I believe that similar, in order to get out of these positions, especially if they don't get these 75 million shares, or if the demand for GameStop keeps going up, I believe it's going to expose that hand, and they're going to have to pump crypto here because they're going to need to raise the money. Because right now, if that type of effort is to tank the market, to have this huge sell-offs here around that time, putting out the press releases, unless this is all, like I said on X, unless this is like 6 different coincidences and that's the perfect timing, then sure. But in order to cover some of those positions here, I believe that they're going to need to create that excitement around the crypto market in order to take profits at much higher levels. I don't think that the levels that there are now is going to be sufficient enough to cover those positions, because even now we've seen billions and billions and billions of dollars come out of the crypto market relatively quickly when they needed cash, like for those of you that were in the market in 2020, 2021. So that drop that we've seen compared to what we have seen is nothing. That was some hold me over cash for right now, but they need more. They need a lot more cash, right? And we've seen evidence of this throughout time. So this is going to be very telling. I think this next week, as far as what happens with price action, obviously macro data, that's going to play a big part. Is going to be very telling for what happens in the market going forward. But I believe that now they're going to desperately need, especially things like the top 10 cryptos, they're going to definitely need those coins to run to cover some of these positions here. I think that what ultimately, outside of whatever you think about Roaring Kitty and whatever you think about GameStop and shorts in the market, blah, 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 whatever you think, even if you don't understand what shorts are, I'll save that for another video as well. But if you take a look here at the effort, the timing, and what is happening, the split that some of these companies want to do from the New York Stock Exchanges, even after some of the accusations, even go look up some of the settled lawsuits and the fines and penalties against Citadel, right? Again, because this video is 23 minutes long. I'll probably put some of this together in part 2. I could do this for over an hour and we can go over the lawsuits and stuff. Go look at this and then say, hey, they're going to split from the New York Stock Exchange. At least that's the desire to. And what do you think is going to become of that when you have a market maker pretty much teaming up with the largest asset manager in the country, right? Which is BlackRock, right? It's very telling for what is happening behind the scenes. And I think that the timing of this here is a great inconvenience to them, right? And I think that what we see going forward here, especially the short volume price action, what we're seeing, borrowed shares, at least a lot of the data that we can see, I think this is going to be very telling going forward. And I do believe that they're going to have to raise additional capital, which is for the crypto holders, especially if you've gotten in. I believe this is going to be very telling for Um, Price action, expectations, where we end up at peak bull run in crypto for things like Doge and Bitcoin, Ethereum, where we end up. This is all going to be very telling, right? We get those blow off tops when the institutions come in and pump the coin, and then that leads to FOMO. A lot of that stuff is very intertwined, right? So we're going to look at the data going forward, and obviously do take a look here at the fluctuations. But that cash grab that they've seen, that wasn't the end all be all. It's going to be more than the 300 million. So they haven't broken any necessary trends. They haven't broken, even with Bitcoin, they haven't broken a 14-day or a 90-day, a 50-day trend. With Doge here, we're still in the same zone actually with Dogecoin. So even for the sell-off here, even we're around like 14 cents or so, we're still in the same zone. Like Doge typically, even now we're having like a green day. It typically, even if you slap it down, the equilibrium until we get that confirmation and that breakout from Bitcoin above like the 73 mark and that 1472 for Doge, it's rested at 15 habitually. So I believe we're going to see it kind of creep back up to around that mark, which is less than a penny. I think we can probably, outside of some macro news coming, we can probably expect that sometime like midweek. But I believe that we're going to possibly, if this is as bad as I think it is, we may even see additional capital come into the market, right? And this can be even bigger than some of the projections that we've seen here. If they're that desperate to tank the market and pull this liquidity from the market all at that same time. Again, like I said, draw your own conclusions. Maybe this is just 6 or 7 different coincidences that are happening at the same time, but I believe there's something there. And when I see this type of effort, like what you're seeing on the chart here, to short something that aggressively when it's not even worth half of what it was back then. If you adjust the split here, you'll see exactly what I'm talking about for GameStop. That's going to be very telling here, all because a guy is posting Uno cards on Twitter. So let me know what you guys think. I will put together the second part of this, and obviously we'll take a look at a deeper price action and get some projections and stuff for the week. But I wanted to put out what I was thinking, and as I'm exploring down the rabbit hole here and getting some ideas, because when I see breakoffs from 100-year-old traditions like the stock market and say, hey, let's go do our own thing, it just kind of raises eyebrows to me, right? And especially with as much controversy as around one of those partners that we've had in the last 4 or 5 years, I find it very interesting. So let me know what you guys think. If you found value, please consider subscribing to the channel. Let's beat Bitcoin to 100K by getting 100K here first. We are on track to do that by the end of the year, but if we can bump that up before like Q3, that'll certainly be great for the channel here, and I'll certainly do something to celebrate here with you guys. So I've been greatly appreciate you guys. I appreciate your patience over the last couple of days here. But as you guys know, if I'm not sure, if I can't look at something tangible like a chart or something, I'll just put out a video and say, this is my opinion, which is what this video is. And we'll go from there. But I don't make videos just to make videos. So I make videos when I have something to say. So I wanted to share this with you guys that I've been looking at the last couple of days. So hope you're able to get something from it and make sense of the last couple of days, or last week really, because I believe we have some interesting times ahead, right? To get ready for another historic year. So with that being said, I appreciate all of you. Thank you. And I will see you guys in the next video.